Hey everybody, James Shepard here. I'd like to welcome you to this special live event. We're talking about dominating B2B payments and building residuals in the process. We're going to give everybody a few more minutes. We got a lot of people jumping on. This event's pretty full. And so I'm going to jump back on here in about 30 seconds. And so we'll pause it until then and then get started. Hey everybody, James Shepard here. So glad you could join us for this special live event. I am very excited to be joined by my friend Eric Jenks, who I'm going to introduce here in a little bit, to talk to you about dominating B2B payments. Most importantly, I really just want to share with you my belief as to why B2B payments at this particular time in our industry is so crucial and so important for many of you to start to shift your focus in that direction. And then also very excited to talk to Eric, who has so much experience, talking about B2B payments, helping ISOs and agents, I believe now for 8 or 9 years, working with them along those lines. So I think we're gonna get a lot of really interesting things. So by way of introduction, to get started, I have a question for you. So over in the chat box, you can put your answer. All I'm looking for is a number. I want you to put down the number of B2B merchants that you have personally or your ISO has sold. Again, you don't have to give me an exact number, but for a lot of you, that might be 0. You're like brand new to B2B payments, put 0 in there. For some of you, you say, well, I've sold, I've sold 5 or 6. I've sold 1 or 2. That's great. Maybe your ISO has hundreds. You could just put a lot, right? Like whatever you want to put in there, doesn't have to be a number, but just give me some context because I want to understand the audience a little bit better and understand, what have you done in the B2B space? So let me kind of just take a look real quick here and let's see what kind of answers we got. So I'm seeing definitely a lot of zeros, so that's great. I'm so glad you're joining us today to learn about it a bit. Steven with more than 10, Tyler with a couple of them, Adam with 10, Samantha 8, Brandon 5, wow, Aaron 500 plus, Eric around different Eric here 10, roughly 5% of your book there, Matt. That's interesting. Good. So this is just some good basic information. Another Crystal with 150. That's awesome. 20-ish. Again, lots and lots of zeros. So a really good mix. I appreciate you giving me that insight because that helps me to kind of understand, and Eric and I both to just understand the mix of the audience here. So again, we have people on here that have sold 500 plus. And then we have those of you that have never even sold a B2B merchant account. And so I think it's really important that we have that mixture, which is great. So now let's dive in and let me just kind of explain this to you a bit and talk about this B2B opportunity. So the first thing I want to tell you is that in my opinion, and I've been wrong before, I'm sure I'll be wrong again, but in my opinion, successful merchant sales professionals, so those who are doing really well, that are building a big book, they're going to be doing one of 3 things in 5 years. So if you fast forward 5 years from now and you accelerate the trends that we've already seen in the payment processing industry, I believe that the successful merchant sales reps are all going to be doing one of 3 things. Okay. Now let me preface this by saying 5 years from now, I do think there will still be some significant number of salespeople that are just out in the field slinging terminals and selling every merchant they come across on a standalone terminal. But that job is going to get harder and harder and harder to be really, really successful. And so I think what we're going to see is a shift to the really successful agents over the next 5 years are going to shift to one of these 3 things. Okay. Number 1, selling verticals on tech and payment solutions, right? So this would be, you're going to become, the expert at selling hair salons on some kind of appointment scheduling software / point of sale solution that makes their lives a lot easier, right? Or like one of my companies I have is we have a self-storage management software with integrated payments where we do dual pricing. So, you're going to be selling something like that to, self-storage. And you might have a collection of I would envision a collection of maybe 3 to 7 verticals, depending on how large they are. If you're just focused on restaurant, that might be a big enough vertical where that's the only thing you sell, right? But the idea is those who are really successful are going to do one of three things. Either you're going to kind of shift your identity a little bit from being like, hey, I'm a payments professional, to being like, hey, I'm a solutions expert. And I provide payment processing as it is integrated into the solutions that I offer, which are more predicated on software and things like that. And that's just the direction. And again, anybody that's been out in the field selling, that if you compare today to 3 years ago, there's a huge difference as far as the percentage of businesses out in the field that you run into that already have an integrated solution. So I think this is a great path. For many of you that are a little more techie, you like this idea, I think this is a fantastic path. So here's my question. So over in the chat of the question box there, you can type your answer to this. For those of you that are focused on just a few verticals between, let's say, maybe there's 1, 2, 3 verticals that are a big focus for you, do me a favor and just type in that box. If you're a person that focuses on a vertical, put the name of the vertical in there. Like you primarily go after restaurant or retail or whatever. And then for those of you that don't, just put, something like I sell everyone, right? Just put the word everyone or I sell everyone. I'm just curious getting the context for the event here. So here we have Robert focuses on restaurant, Leslie on wholesale, which makes sense. I think you were one of the ones with B2B, auto repair and service, restaurant, auto repair, restaurant, QSR, bakeries, restaurant, Marcy going after everyone, which again is fine. I mean, like I said, that's a great strategy right now. A lot of people do that, especially with dual pricing, cash discounting. Adam goes after tourism, Jeff, restaurant, lots of everyone with cash discounting here, pizza, retailers, medical, and on the list goes, right? And so nightclubs, restaurants, home services businesses. So you get this idea, right? Like that's one solution, and you're going to see more and more people are going to shift that direction. Okay. Why? Because it just makes a lot of sense. Like it's the accounts are really sticky. It's a lot easier to sell. It's maybe a little harder to set up and service the accounts. But these are sticky accounts. It's what merchants want. And so a lot of you are going to go that direction. So that's number one. Number two, the second thing I think people will be doing, and some of you already touched on this in the business type that you go after, Melina, I think put in here home services. So selling card not present merchants on simple solutions. So there's going to be this other group of you that says, I like selling the smaller merchants. I like that sales process is simple, it's easy, but it's becoming more competitive to sell the physical location, retail, restaurant type businesses, auto repair, things like that. That's becoming a little harder because of the new focus on software and integrated payments. So you say that's getting a little tricky. So I think many of you are going to shift your focus to card not present. So you're going to go after plumbers, electricians, home inspectors, HVAC providers, lawn care services, along with many, 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 many others that are card not present. Now, not necessarily e-commerce, but card not present merchants where all they need really is like a virtual terminal. And there really is a big opportunity for that. And Patrice, who we have on here that we'll talk to in a little bit, Eric, I mean, they have great solutions for this as well. But this idea of going after kind of just the card not present world, right? And saying, hey, I just want to go card not present and I'm going to sell, if you're looking for, I want to sell small to medium-sized merchants that don't have a lot of, complication in the setup, and that there's still a lot of room where I can go sell these people. This is a good one. You would not believe how many home services businesses either don't even take card or they're just using like a little dongle and they can't even email or text an invoice, when they're not there. So that I think is a number two. I think that's a huge opportunity. I know people already that are doing very well with this and others who are starting to focus on it. So again, I like asking these questions because it really helps me and Eric to get the context of our audience. So over in the question box, if you could answer just one more question for me, and then I promise to leave you alone for a little bit here. What percentage of your portfolio today is card present? Okay, so what percentage of your portfolio today is, we're going to even call it traditional card present merchants. So we're talking about retail, restaurant, auto repair, quick serve, that type of thing, hobby store, liquor store, convenience store, traditional card present. What percentage of your portfolio is traditional card present? So some of you might be 80%, whatever it is, 98% for Ella, 50% for Tracy, 85% for Paul, 100% for Samantha, 90% for Matthew, 100% for Alan, Adam's at 30%. We're seeing a lot of 70 and up. Okay. The vast majority here are 70 and up. Okay. So here's what that tells me, right? Many of you that just said 70% and up, when I ask this question to you in 5 years, I think you're going to be at 30% or lower. Okay. Why? Because again, unless you're going to go the route of embracing software solutions to sell to these physical location verticals, which many of you will, and again, I think that's fantastic. That's a great way to go. Unless you're going to do that, those opportunities are going to get harder to come by, and you're going to start to realize, well, wait a second, I can go after these card not present merchants, right? And I can get something there, or I can go number 3 here, which I already asked you the question about how much B2B you do, and that's going to be selling B2B merchants on payment acceptance. Okay. So I want to take just another minute here, and then I'm going to introduce Eric in about 4 or 5 minutes. So I want to take just a minute to talk about B2B for 1 second and why I think it's such a big opportunity. Number 1 on my list, when you look at ISO and agent, that model, right? And what we've accomplished, which is a lot. I mean, don't let anybody tell you different. If it wasn't for the agents that are out selling payment processing, if it wasn't for the ISOs that are building these sales teams, we wouldn't have Visa and MasterCard the way that they are today. Like, it was a large part due to us to create this idea of merchants accepting payments. And it turned out that getting merchants to accept card payments is something ISOs and agents are really good at. Maybe the best thing we've ever done. We are very good at going in and talking that merchant into, you really should be taking card payments. Here's why, right? It was, back in the days, even when I started selling, 12 years ago, it would be, sorry there. When I started selling 12 years ago, it would be things like, well, your average ticket size is going to be a lot better, right? When you take card, it's going to be greater. I sell in rural Pennsylvania. So 12 years ago for me was like 25 years ago for most of you. A lot of merchants not accepting card payments. So talking them into accepting card payments, that's something that we are really good at as a group because we're like salespeople. Like, that's what we do. Like, we can go sell people on stuff. What we're maybe not as good at, a lot of us, and some of you are fantastic at this, but a lot of us maybe aren't as good at the complex solution sale, right? And we need to get better at it, but some of us are not as good at that. And what I love about B2B is B2B, where it's at now, in some ways is kind of like where the traditional market was in the 80s and early 90s, of kind of like the Zon Jr. and kind of just very simple, but it was like, you just need to be able to accept these payments. And there's a few things that are needed, the technology, which we're gonna talk to Eric about in a minute, and there's interchange optimization. So there's more moving parts for sure, but at its core, right now, there's like $33 trillion of revenue, and less than, I'm pretty sure it's still less than 10% of that volume is running as card payments. So what we're talking about here is we're talking about businesses like wholesalers and vendors that, or wholesalers that are selling to vendors, and these businesses that are selling to businesses, they're not taking card payment. They're using ACH, they're using check payments, they're offering 30, 60, 90-day terms, which we'll talk about in a second. And so this is an opportunity for us as a group to really do what we do best and bring card acceptance to a new kind of segment of the market that is massive and could be very profitable for us. So before I introduce Eric, let me just give you 4 things real quick, and we're going to dive much deeper into this in our conversation with Eric. By the way, let me just say right now that I've asked kind of my questions that I wanted to know, if you have questions that you have for myself or for Eric, you can go ahead and start typing those out now. Once I get done interviewing Eric here in a minute, we're going to have plenty of time for Q&A. So I'll look at the questions that you ask, and Eric and I will do our best to answer those questions. So card acceptance for B2B, let's talk about it for a minute. Okay. What do we need to consider? We need to think about cost. And when we're talking to B2B merchants, we need to think about cost. I'm going to touch on each of these for a second, and then I'm going to introduce Eric, and we're going to dive a lot deeper. Okay. Number 1 is cost of capital. Okay. In order for these wholesalers, these B2B companies, most of them they're providing businesses with something in bulk. So they're selling them, milk, or they're selling them, whatever widget it is that they need, right? Some kind of services, uniforms, catering, whatever it is, they're providing things kind of in bulk. And somebody has to pay for the materials, the inventory, the payroll to provide those services. Somebody has to have the money for that. And so these B2B merchants are, in most cases, borrowing money. They have a line of credit. They're getting capital from the bank, and they're saying, hey, our customers don't pay us usually for 30, 60, even 90 days after they receive the stuff, the order, the services, whatever it is. And we have to pay all of our people and buy the inventory and all that. So we need to borrow money in order to be able to have the money to run our business while we wait for our vendors to pay us. Okay. Well, that's expensive. And as interest rates go up, it's becoming more and more expensive, right? Versus if I can just get my customers to pay me instantly with a card, let them deal with the financing through Visa or MasterCard, well, then that's great. I don't need to borrow that money. So now I don't have that cost of capital anymore. Okay. Number two, cost of collections. There is a ton of cost involved with getting payment. So most of these B2B places, they'll have like one full-time person in a lot of cases where their sole job is to just reach out. They call it accounts receivable, and they just reach out to the clients on a daily basis. Hey, when are you going to pay us? Hey, your payment's due. Hey, there's going to be a late fee if you don't pay us. When are you going to pay us? How are you going to pay us? Right? Let me come over and get a check. Let me see, it's ridiculous. That's a huge, huge cost that they have as far as payroll and even opportunity cost of, people could be doing other things. Instead, they're trying to collect money versus if they would get a card payment up front and they would really push their clients and say, hey, just pay us with a credit card and we don't have to do any of this. Now they don't have the cost of collections. Okay. Number three, the cost of inflation. This is becoming a real thing. If you haven't noticed, like our inflation right now is very high. Historically speaking, it's very high. Well, why is that a problem? Well, because if I give my client 90-day terms and I say, okay, you're going to order $30,000 worth of stuff from me, and I'm going to let you pay it in 90 days. Well, it's not a huge amount, but there is going to be inflation where all of a sudden that $30,000 is actually not worth as much in 90 days. So the buying power of my 30,000 went down by, maybe 0.5% or 1% in that 90 days. That's pretty significant, right? Even if it goes down 0.25%, that's significant when we're comparing it with the cost of card acceptance, right? And so that's the final one, which is the cost of card acceptance. And so we have to look at these top three, and then we compare that to the cost of acceptance to say, what's the best deal for the merchant? And I think what you're going to find is that at this particular point in time, we have a really good pitch for B2B merchants that we can go to them and say, look, you're not accepting cards, or you're not accepting very much in cards. We can get you a great technology solution to optimize your costs, and we are going to help you to encourage people to pay with cards because it's going to save you on your cost of capital, it's going to wipe out your cost of collections, and it's going to wipe out your cost of inflation. And those are three big things that are on the minds of these B2B merchants. Okay. Now, again, go ahead, keep on typing your questions out. I'm going to ask Eric to go ahead and get his webcam on there and his mic. I'm going to go to his slide here and put up a fancy slide here for Eric.
Probably makes me look good there.
There you go, Eric. I'm doing my best. So, Eric, start us off for a minute here. Give us a little bit of your background. When did you come to Patrice? What's your background in B2B? Tell us a little bit about your story, and then we're going to dive into some questions here.
Yeah, just in a way of kind of rapport building and let you know where I'm coming from. I started in payments over 20 years ago. I, in college, was building websites for folks back in the day when like a 5-page website, made in front page with a contact us email was good enough for e-commerce, right? And so the bank picked me up to do some e-commerce integrations piece back then. And it's funny because during training, one of my first projects, they're like, hey, we need you to start making some phone calls because we want you to sell these things.
Wow, you actually got a Zon Jr. for us. Look at that.
Yeah, instead of the old knuckle buster, right? The 2-part carbonless. So, it's been nice because this industry is always moving forward, right? There's constant innovation. So I know a lot of folks are feeling there's a lot of change right now. And that's hopefully what makes this industry fun for you. It's been what's been fun for me. Moved from there, sold on the street for several years, was a part of a team that we had a pretty good system with financial institutions, averaged over 30 new deals a month for over 5 years, just selling accounts. And one day I'd be at the farmer's market, and the next day I'd be at an institutional manufacturing facility. You just never knew what was going to happen. And that made things interesting. I started to get out of the industry. I went and bought an insurance agency and managed an insurance agency for 5 years. And that's where the division for B2B became really clear, right? Because like in insurance, you have commercial lines, very different type of insurance, different questions that you're dealing with versus personal lines. And I'll tell you what, even in insurance, commercial lines way more profitable, a lot more work, a lot more questions, a lot more due diligence, and maybe even some underwriting. But those folks were just a lot more fun for me. Several years back, my friend Scott Judkins asked me to come on as the sales manager here at Patrice and train agents across the country on how to close more B2B business. And I've been here for nearly a decade. And over that period of time, we've helped folks, land over 40,000 B2B accounts. Last year, we did $44 billion in processing. Over half of that was in level 2 or level 3. And so really niche market there. And the cool thing is that, for those of you that may even be nervous about the current market, B2B largely recession proof, right? And continuing to grow. I think we'll look at some numbers. Don't take my word for it. I'll just tell you, there's lies and there's damn lies and there's statistics, right? And I'll show you some source documents here so you don't have to take my word for it. But the B2B market is of interest to folks all across many verticals because of the tremendous growth in it. So a little bit of background.
So let's do this. So just to kind of start out, Eric, for those, we saw the people answering the question that they've, never sold a B2B account. So for those individuals, what is a B2B account? Maybe you can give us a couple of examples of like what types of businesses are these? What do they process? How does it work? Give us like the definition of like what is a B2B account?
Yeah, B2B, business to business, right? Account. Sometimes folks might call it wholesale accounts. When you start doing this, suddenly you're kind of like, I see B2B everywhere, right? And it's asking one more question beyond the normal purchase, I think. And so that would be my first thing, is for agents to stay curious. Ask, how did this product get here? How did the water get here? How did the electricity get here? How did this get here? Just ask one more question. So oftentimes I like to tell the story that I walked up to an espresso stand. It was a referral, and I asked them a question, and I think this would be a freebie. Where do you use your credit card, right? Talking to the business owner, where do you use your credit card? And they mentioned, hey, our biggest expense as espresso stand is dairy. There's a local dairy. We like to buy organic. We like to source local. And this dairy, we use our credit card and buy milk from them. And I said, hey, can you mind introducing me to them? Because I haven't met them yet. And a nice little B2B account, a dairy selling a product to a business that's selling to the end consumer. Oftentimes, you just have to drive down the freeway, right? When you start seeing all those white vans that are blocking you and creating traffic, many of them are B2B customers, right? And so oftentimes, like we might consider in the trades, electricians, there's certainly going to be residential electricians. Those are going to be kind of more your business to consumer, but there's a lot of folks that specialize in business to business, those industrial electricians. And so how did the product get there? Even in the high risk world, right? And so recently we've opened up new markets in firearms and ammunition, right? And so maybe a gun dealer might be a great retail location for you, but how much bigger to go up to the manufacturer, right? Or even the wholesale distributor and take on that business. And so it's just following that supply chain up one more level. And that's what makes B2B super exciting, is because once you take that first step, you can say, hey, was that interesting? Okay, what about the next step up, right? So, I mean, hey, I might go from the espresso stand to the dairy, but what about that dairy? Where are they buying their fertilizer from, right? Where are they buying their tractors from, right? And so you can keep moving up the ladder until you find something that you like a niche that hasn't been tapped into, and take advantage, I think, of one of those, that first market segment you're talking about. Get specialized, get into a vertical that you like and is untapped, because many of this is largely untapped for electronic payments.
Okay, so let's talk about this for a second. So we have these B2B merchants right now, and you may have a better percentage than I do, but a small percentage of the revenue is going to card payments.
Yeah.
Why is that, right? Like, why aren't they pushing card? Why are they kind of discouraging card payments in a lot of cases, or maybe not even accepting it?
Yeah, I mean, I think the largest reason is the perceived cost, right? And so a lot of these folks, started out as like folks like me and you, small business that grew, and now they, have a nice little operation, and they've gotten by with checks, and maybe their bank pitched an ACH solution, right? And so that's work. And the philosophy, if it ain't broke, don't fix it, largely applies. And unfortunately, I think a lot of our industry is very sensitive to certain numbers, interchange being one of them. And they bring up these numbers like 3% of a $10,000 sale, and that really scares people away, right? And unfortunately, I think what we're largely seeing is that's not the big picture view, right? And so I think we're encouraging folks to maybe take a step back and, like you're saying, understand the true cost of acceptance and understand the cost of the full payment, And when I ask folks, how much does it cost to take payments at your organization? A lot of times these businesses, they have no idea, right? And then that's an opportunity for the agent to be the professional, start asking some questions, and let them see that honestly, all things being equal, when we have equal footing with these other payments right now is actually maybe one of the less expensive options. I know I'm probably giving some folks some heartburn there, and I'm not saying in all circumstances, but in many circumstances right now, businesses are losing money on check and ACH compared to the cost of doing credit card.
So let's dig a little bit deeper into that. I mean, how do you go about explaining that? So, again, we find a B2B merchant, we talk to them, they say, hey, we don't take card, or we really discourage it. And, you say, well, you should be taking card. And they say, well, yeah, but the cost is way too high versus ACH or check. How do you respond? Give us the kind of the simple explanation.
Yeah. So I'll just say, first off, a lot of sales professionals just need to get into their old zone where they get comfortable asking some uncomfortable questions, right? And so, like a doctor, you don't want to prescribe anything until you know the full situation, right? So we're going to need to ask some questions about them. So a lot of our agents have been used to being like, how much did you process last month, right? Let me see your statement. That's a very narrow view, right? So we might want to ask something like, what was your revenue last year, right? How much of that revenue was on payments, right? So this gives me a more holistic view. I also like to encourage folks to stop looking in the rearview mirror and maybe ask questions forward thinking and say, well, now that I know your revenue, do you anticipate that to look like in 3 to 5 years? Because that will be really helpful if you're seeing somebody's like, hey, we anticipate doubling in the next year or two, right? Those are very helpful questions. Then you can start asking, how are those payments processed? Do you have someone that does that, right? Because we're going to start digging into what you just mentioned, the cost of the collections piece, right? That's going to lead into some of these other questions, right? Of like, how is the organization's financed, And a lot of times you can lead with some expertise, and maybe we'll talk about this more in a minute, but hey, prime is at 5.5% right now. Man, the Fed just jacked it up another 0.75%, right? Have a little dialogue about that. How did that impact you, right? And then now we can start understanding,
and that's
like,
prime. Obviously, their credit line their short-term credit line is not at 5.5. It's probably at 10 or 9 or something,
Not likely to be less than prime, right? And a lot of times they won't even know, right? But what we're doing is we're getting the information for us to be able to start making some good recommendations, and also start being able to dial back some of those misconceptions that credit cards are expensive, right? And so, because there are these other factors. I mean, from a personal story, when I had the agency, I had one person, my office manager, that had to have the checks in every day, right? In the insurance world, we don't want any delay. So every day we had somebody go into the bank, right? That wasn't cheap, right? We're talking anywhere between 10 and 15 hours a week of labor expense that I was paying for just to process checks, right? And so someone come in and say, hey, we could do credit card and take away that payroll, I would happily pay 3%, right? So because it was economically beneficial for me. So
right, and that's not even that's not even counting all these other costs you just mentioned, right? It's like you just waited for 90 days to get a payment, or 60 days. And you had to borrow the money during that time, so you have to pay your interest expense. You have the cost of inflation eating away at your money. Then you finally get the check, and now you got to have an employee drive to the bank to deposit it.
Exactly, right? And then folks, oh, well, we can digitize that. Yeah, well, that's expensive too. And the bank doesn't do it for free. You know, I
Right.
think I saw most recent still over $1.50 to do that. And we haven't even got into the benefits of like guaranteed funds, right? And that peace of
Right.
mind to know that that's going to clear. Because, man, I had some good customers, but sometimes the check went boing, right? And that's expensive, right? And
Yep.
so I like the peace of mind of being able to know before I send the product out that I'm going to get paid. And so there's multiple benefits that we need to take an attempt at calculating so that the owner can make a good decision, right? So the stakeholders at the business can make a good decision. Because right now they're uninformed. They think it's
Right.
3% versus
Right.
nothing, free. Well, it's not
Right.
free, right?
Right.
So,
Okay, so I want to shift gears just a little bit and talk about agent benefit, and then I do have a couple of other kind of follow-ups here
mhm.
about the tech and pay
Yeah,
trace
yeah,
and the
yeah.
bank card. So when we talk about we talk about the agent benefit of this thing. Obviously, it's very different because we have the B2B merchants have really, really high volume, like a lot of times,
Yes. Yeah,
right?
yeah.
But the margins, they're not getting 200 basis points of margin like they would on, say, a cash discount or like NAB has their Edge program. So talk about the profitability and kind of what that looks like as you're building out a portfolio to give them a little context.
Yeah, yeah, absolutely. Certainly, there was a time before like surcharging cash discount that I think B2B was probably the most lucrative product that was out there,
By
right?
far. Yeah.
By far. And then that's been certainly eclipsed right now. There's some evidence to say that maybe that those products are starting to see some price compression and coming back in. Um, I hate to jump into like a broad thing about B2B, but I'll tell you just a couple things. Number one, retention is amazing. That we have seen that on average, our retention is more than 2 times. A lot of times it's closer to 3 times as long in the B2B market. Once you get something going, you really have to work hard to screw it up for folks to leave. So they stay for a long time. And for those of us that have been in the SaaS model, like recurring revenue, like that's just a dream come true. These are our ideal clients.
Right.
Number two, this conversation lends itself away from the price conversation and more to the value conversation, and allows you to price it at a way to make it profitable for you to manage. And so from personal experience, I had a large rockery that on their slow months did 300K, and on their busy months would do over 3 million. And I had them at 72 basis points. And that was a really nice account for me, right?
I bet.
And they
Yeah.
knew that was, but man, if I drove up there all the time, and when they needed something, I was happy to drive out there. It was the kind of client you want to have. Now, I think that's on the high end, right? But most of our accounts we're seeing that over 50 basis points. And it's not to say we don't see folks that sell it cheap, but I'm just saying you don't have to sell it cheap, right?
Right.
And so a lot of folks, are used to like a penny or two or a basis point or two. And certainly there are situations where maybe that's what you have to do. But in the B2B market, when we start looking at, hey, what value that they want, they tend to want to pay for it. In fact, I think there's even some healthy skepticism when folks come in and they're like, hey, I can do all this for 20 bucks a month, right? They're like, what
Right.
am I going to get for 20 bucks a month? My business
Right.
depends on this service, right? And
Right.
so, um, yeah, I think the residual opportunity is much higher.
Yeah. So again, just from my perspective, when you're kind of thinking about the numbers, you're like, okay, let's say 50 basis points is kind of a conservative,
Yeah,
average number, right? So 50 basis points, the difference being a lot of you would think, well, wait a minute, I'm making 200 basis points on cash discount. Well, yeah, but your average cash discount deal, dual pricing, whatever you're doing, that average deal is probably maybe 20 to 30,000 a month in volume, and you're making 200 basis points, right?
yeah,
Well, if your average B2B merchant's doing, I don't know, let's say 150,000 a month, 200,000 a month, all of a sudden the dollar amount of residual is actually higher there because they're doing 4, 5, 6 times the volume at a fourth of the margin, right?
yeah.
So I don't know if that's kind of what you're seeing, but in my
No,
in my experience,
absolutely.
when I talk to agents with the portfolios, I don't think I've ever seen an agent with a B2B portfolio where their average profitability was less than an agent with a non B2B portfolio, even doing, Edge or dual pricing or what cash
Yeah,
discounting or any of those
absolutely.
programs.
Yeah, and this pricing is sustainable, right? I mean, that's the thing. I think it can go on quite a ways, and you know, think about the opportunity. Like, hey, I love restaurant owners. I think they're some of the most resourceful people. They're fun to be around. But what about going after the restaurant supplier, right? Somebody had to sell them that stove, right? And the stainless
Right.
steel hood, right? And then how about all the supplies, industrial laundry, right? All of that
Yeah.
stuff is like really good B2B business. And now instead of serving one restaurant, right, you're serving one wholesaler that's servicing 20, 30, 100 restaurants, and their volumes funneling up to there. The economics are in your favor.
Yeah. And I think one of the other things, Eric, I don't know if you've seen this, but in my experience, it does seem like I know our good friend Roger McNamara is at Visa now working to increase B2B acceptance. It's
Yeah,
like
yeah.
it seems like the card brands are really getting behind this as well to make sure
Oh,
that it's a two-sided
absolutely.
market. You know, it's like
Absolutely.
it's the opportunities there right now. I feel like, most businesses do have a card that they could use to make these payments, right?
Yeah, yeah, absolutely. And if not, there's certainly a bank that's willing to
It's
help
willing to do it.
them, right? And
Okay, so
so,
I have one more general question, then I do want to talk about Patrace and NAB for a second before we get into the Q&A. But when we talk about technology, so one of the things that I touched on earlier, one of the kind of drawbacks in a way to the whole shift to integrated payments is a lot of the people that are on here right now that have historically been payment processing
sure.
professionals
Yeah.
have to become like technology professionals and solutions providers. And not that,
Mm-hmm.
again, that's a good thing if they can make the shift, but a lot of them have kind of struggled with that kind of shift in identity.
Sure. Yeah, yeah.
And I'm curious to hear your thoughts on this. And I don't think we've ever even discussed this really, but it's like, what are the needs of the B2B market? And I guess my a really specific question would be like, when you look at Patrace as a whole, how many of these merchants are using just the Patrace like as it is system versus
Sure.
like an integration with their ERP or whatever? So talk about kind of
Yeah,
the
yeah.
technology side
Yeah,
of
yeah,
this.
absolutely. So, just looking within our own pool, right? Little less than half. So like it's in the high 40% use our virtual terminal, right? So I
Right.
think for that second market segment that you said card not present, smaller merchants either using one of the apps or the terminal, just logging in, either swiping or keying in the transaction, and that works
Right.
fine. Um, our larger merchants are largely integrated.
Okay.
And I'll just say our stickier merchants, the ones that stick around, are largely integrated. And
And you guys already have, I think, a lot of integration. So maybe you could kind of talk to that a little bit because again, like when you're talking about restaurant retail, usually the
yeah,
problem we run into is you can't integrate. So talk
yeah,
talk about
it's
the
tough.
B2B side a
It
little
can
bit.
be tough, right? So I mean, obviously there's several options for QuickBooks integrations, and so we're looking to, reduce clicks, make life easier at the business. So that's where this next set of questions, as far as that, the cost of acceptance. How are you doing business right now, right? I mean, if they're already in QuickBooks, let's try to do payments inside QuickBooks. If they're already in an ERP, let's see if we can get the ERP to integrate. And certainly, that can be a lot longer process. But some of these businesses, quite frankly, we'd be surprised. They would be willing to do an integration themselves, right? In their world, there's
Yeah.
something custom that they do. There's a unique pain point, and those resources are not that difficult to come by and do some kind of integration. Yeah, but I'd say a little more than half our
Okay.
business has integrated. Yeah.
Great. I was just curious about that number. I think that's interesting. And I think it just goes again to the fact though, at least one of the things I found, Eric, that is interesting is that it feels to me the ones I've done, it seems like B2B is a bit more open to integration. Like it seems like most of the systems that most of the B2B companies use do allow
Sure.
an integration. I don't know if you've seen that. It just seems to me like there's a significantly greater opportunity to integrate and it's kind of like easier versus to me the smaller ones where you just get locked out because you're going up
Yeah.
against Toast or
Yeah.
Square or whatever. You know what I
Yeah.
mean?
Absolutely. Well, I mean, I think you had asked earlier, like, hey, for folks that don't feel like technical experts, like, how do I go in and talk with these? You have to maybe remember that you're a business owner as well, and you're paying taxes as well, and you're filling out the forms, and you're waiting in the DMV, right? And so this is something that those owners are having to deal with as
Yeah.
well. And they're looking for solutions to get time back, right? And
Yeah.
so if you can make life easier by doing an integration, by all means. But if like making life easier means let's just hop onto the internet and key this in and be done, then that is oftentimes enough. So
Yeah. Cool. Okay, so we are about to get to Q&A. If you have questions, start typing them out. I know a lot of you already have. We're going to get to those in 1 second. Before we do that, Eric, last thing, tell us about this combination with Patrice, North American Bank Card coming together, kind of having this whole seamless experience now. I've got contact information up on the screen with your slide. Talk to
Yeah,
us
yeah, yeah.
about that and kind of where you see this going and what you have to offer the agents and ISOs.
Yeah, for sure. I think talk of the town beginning of the year, obviously in December, we were acquired by North American. And I'll tell you, it was an interesting experience for me. We talked with a lot of folks in the industry, and one of the things I like about North American is they're very aggressive, and they're actually becoming more aggressive. They're largely reinventing themselves. They're investing heavily in technology. I know a lot of folks may have had experience, especially if you're a veteran, you may have had some experiences years ago. I'll just tell you, I think the NAB of today is very different from the NAB of yesteryear. One of the things that agents are telling me is that, like, man, the onboarding experience, the ability to just kind of put in a form, get that, streamlined application, get instant approvals, multiple funding windows. I mean, these are things that agents were coming to us and they were frustrated with.
Right.
Even they have they are very aggressive stance on, hey, if it's not illegal, we like to take a look at it, right? And so there's even industry types that have been hard to place that folks have been able to do that. For us in B2B, like, hey, you know what? There's actually some B2B stuff out there that's considered high risk, and it's been very helpful. We've seen some really big accounts come through and get the thumbs up, right? And that's a win. So
yeah, it's been really interesting for me too, just kind of seeing the evolution of the industry where, for so long I was kind of like, I only want to promote processor agnostic technology for a long time. And it's like, while that certainly has its place, I think a lot of times there's just so many benefits to having the full seamless solution for the agent to
sure.
sell, right? Where it's like the same company is handling the tech and the payments.
Yeah.
That I just love it. Like it's,
Yeah.
as I actually work with agents and it's like, oh, let's do this processor agnostic thing and this. And again, I love a lot of processor agnostic companies, but I think ultimately there's a lot of benefits to having everything under one
Yeah.
roof. So I don't know, maybe you'd
Yeah,
speak to that a little bit too.
absolutely. I mean, I'll just say that we're not going to abandon our ISO channel, right? I mean, right
Right.
now our partners represent a large percentage of our income, and it would just be stupid of us to do that. So we're going to continue to support our partners and offer the different platforms, First Data, TSYS, Global, et cetera, just like we have. And we've added this on as an option. And for some folks, that's going to be a great fit. And
Right.
for other folks, it's not, and that's great. You can still come in, and where the technology is a win for the merchant and for you, let's chat.
Love it.
So
Great. Okay, cool. All right, and again, we have contact info up on the screen, so you can take a look at that.
yeah,
Eric, I'm gonna run through these questions,
sure.
and I'll throw some at you. I'll try to answer some of them here. So, how many businesses have cards with 25,000 and up card limits? So I guess the question is, are there a lot of businesses today that have cards where they could make these large B2B purchases? Is that a constraint in the flow of things, or is that just a readily available thing?
Well, I don't know that it's readily available, but I think that maybe one misconception. And so, I mean, I'll just throw out a couple numbers real quick that last year, and I'm getting this from Visa Navigate. So if you want to look up, I think they call $11 trillion pie. Google that. I can send the link later. But 55% of the checks that businesses wrote were under $500 last year. So 55%. And folks are like, how many is that? And I'm just looking over here. It was 2.9 billion checks, B2B only, not consumer checks, just B2B checks were written. And most of those 55% were under $500. So the issuing side is it's not as much of a concern. Well, how about big ticket? 11% were over $5,000. Right. So most businesses do have the credit, and we don't necessarily have to crack the big nut to start. Let's just start getting some of that business.
Right.
And show them that it's a win.
And I think that's I'm glad you said that, Eric. One of the points I wanted to make that I forgot about was, a big part of this is getting your foot in the door where these businesses, it's like become their preferred, you're the company that processes their credit card payments, right?
Yeah.
And maybe that's only 10% of their revenue right now. Maybe it's only 5%, maybe it's 1%. But the thing is, over the next 5 years, I think we're going to see big increases. I certainly don't think we're going to see a decline. We're seeing increases there. Right?
Only
so your portfolio is going to grow. So you might sell a merchant that's doing $100,000 a month now, and 3 years from now, they might be doing $600,000 a month, and they didn't even grow. It's just that they started realizing how good it was to use card payments, and they're doing $1 million a month, and instead of running 10%, they're running 60%. So,
Yeah.
I think there's a big opportunity there as well to kind of establish the portfolio and then watch it grow as card acceptance increases.
Yeah, card acceptance is going to increase. And my friend Justin Bolrath pointed out that even people's spending habits are changing right now. So he's
Yes.
seen an increase of the effective rate, but it's largely as people move from debit to credit. And
Right.
so they're seeing some shifts there. And so we want to take advantage of these trends and
Yep.
help folks optimize that.
Cool. So Ray posted a question here at the very beginning. I think we probably answered it in there, but just to clarify, yeah, if you're if you're selling payment processing, all of your sales are B2B, meaning you're selling B2B. But what
You
we're
are a
talking about
B2B
is B2B
business.
payments. So selling merchants that are doing payments from business to business.
Exactly
That was
correct.
just a little
Yeah.
area of confusion there.
A lot of times we used to say, hey, let's not knock on the doors of the restaurants, the shopping mall. We want to go to the industrial areas, right?
Yes.
So those
Exactly.
are your businesses that we're largely looking at.
Cool. Any good data sources that you're aware of, Eric? Somebody was asking about that, just as far as kind of cost of acquisition and how do we find, the data to go after these people. Any thoughts there?
Yeah, I think you can. Visa and Forrester came out with a document, and I'd be happy to attach that. That's the title of the document is Total Economic Impact of Commercial Card Acceptance, and it breaks down the statistics
Awesome.
of like what those things cost. I'll be happy to share that. The statistic I love the most is at the end. 33% of businesses that switched to plastic were happier.
Wow.
Just happier. Like,
Yeah.
how much is that worth? You know?
Right.
So we're
So,
seeing that in
and
real stores.
maybe even we'll see what works out, but maybe even the marketing department over there, you guys could maybe coordinate and send out a follow-up email and
Oh,
include that
for sure.
document in
Yeah, I'd
there.
love to do
Yeah,
that. I'd
that'd be
love to do
great.
that.
Um, okay. Oh yeah, and there's funny. There's racing. I got it now. So sorry about that, Ray. We already got it. All right. Let's see. B2B, like, what else does Visa have available? I know for a while they had like a lookup thing. Do they still? I don't know if they still have that, or what are
Yeah, they moved
any other
that.
tools?
I think we scared people away because they took that and now it's hidden behind the curtain. So we are asking if they'll bring that back out. And so yeah, right now I think it's really going to be up to sales systems to be put in place. I highly recommend. I use Zoom Info a lot. I know there's
Yes.
a lot of different data tools that way, but you're going to have to start going back to researching. Of course, the best way, again, just asking the businesses that you're at, where do you spend
Right.
your
I mean, a lot of you on here have 100, 200 merchant accounts that are traditional. If you
yeah.
went back to all of them to see how they're doing and in that conversation said, where do you spend money at for your business? Where does your business spend money at? And then get those introductions. To your point, I think that'd be great. What do you mean by prime? So obviously we're talking here about the interest rate that you pay on debt. And so when you go to a bank to borrow money, that bank has to borrow the money from the federal government. So when the Fed raises the interest rate, you probably see news articles about that. What that means is that trickles down, and now banks have to raise their interest rates in order to make money on the debt. So the difference would be if I get paid, let's say I sell somebody $1,000, widget. Well, if they're going to pay me that $1,000 with a card today, then I have my money now. I don't need to borrow any money for the widget. If I'm going to get the money 90 days from now, I need to borrow that $1,000 to pay for my payroll and my other costs during the next 90 days potentially. And so there's a cost there.
Yeah, and I'm going to do a little math lesson real quick if we have a
Right.
minute.
Yeah,
So,
you're fine.
because you had asked me to do this, so I want prime right now is 5.5%, right? So that's anybody that's saying it's less than that, either their bank loves them and is giving them a discount for free, not likely, but they're probably paying more. And generally, folks mark that up, 3 basis points or 3%. So let's just make an assumption that it's 8.5%. So I can take 8.5%, divide it by the number of days in the year, 365, and I'll come up with a number. It's 23 basis points. That's how much it's costing them per day to have that money, right? And if I times that out by 60 days, so net 60, it takes me 60 days to get my check back from my customer, then that means it's going to cost me 1.4%, just like right off the bat. Well, that number you can double with interest. Like right now, I think inflation, they're talking 9%, but if you just use 8.5% again, so now we're doubling that number, you're north of 2.8% in cost between inflation and the cost of borrowing money to get your check or get your cash, right?
Yep.
Well, there's several interchange categories that are less than 2.8%. So that's where we can literally come back in and say, if you're doing a net 60 environment, with just the current numbers, it's less expensive to take credit card right now.
Yeah,
So
just giving your clients the ability to choose. Hey, you could pay now with a card. Even giving them that option. If they choose that, it's actually going to be cheaper, and you're going to get your money right away.
present
So,
value of money. It's always better to get that cash in your pocket today.
talk a little bit about the dual pricing and kind of these different tender pricing. Obviously, North American Bank Card with their Edge program.
Yeah.
I was kind of curious actually when that whole transaction happened. Has that been a conversation at all, or is B? I know like B2B hasn't really been big on it yet, but is that a conversation?
Yeah, well, it's interesting. B2B they've been doing surcharge under the radar for a long time.
Yeah.
And so we're looking at, implementing new technology to do compliant, probably dual pricing and compliant surcharging and give folks options. So we're actively working that way, probably a Q4, Q1 solution. So there's a lot of talk with that. And we think the combination of, you brought this up before, the combination of interchange optimization
Right.
with dual pricing, right? Or
Yes.
interchange optimization with surcharging obviously now multiplies profitability or even just gives merchants a more competitive price point to be at. And so it's definitely something that's in the works right now.
Yeah, good. Yeah, Mark makes a good point about here about the net 30. So yeah, the B2B merchant would kind of change their terms in a way. So they would say, hey, if you pay now with a card, then that's great. If you need net 30, we can do that. So they're giving different options. I think Mark is the right answer there.
Yeah,
Oh, let's see here. So, an example of monthly residuals. I mean, again, we didn't want to get too much into that, but again, if you take a B2B account doing 100,000 a month, let's say you got them at 50 basis points, right? That's $500 in margin. And let's say you're at a 50% split, you're making $250 a month. And then you can run that math up. Maybe your split's a little higher or lower. Maybe you're doing a million a month instead of 100,000 a month. You can kind of see, in that example, a merchant doing a million a month would be, $2,500 a month in residual. And I don't know, Eric. I mean, there's hardly an hour that goes by that our statement analysis company doesn't get $1 million a month statement. I mean, if you're selling B2B, they're everywhere.
yeah, again, and this is just looking in the rear view, right? I mean, this 11 trillion opportunity is not stuff that's on plastic right now. So, I mean, one of our favorite stories is, hey, we set this guy up and he was doing $5,000 a month. We showed him how competitive plastic was. He moved more plastic over and he went from 5,000 to $250,000 because I'm not just talking about payments, I'm talking about revenue. Like, how big is this company? How much money are they pushing through? So,
Right, right. Cool. I'm gonna do a couple more. If I missed your question, I promise I'm gonna give this entire kind of all the answers here and all the questions rather. I'm gonna give those to Eric and his team, and they can follow up, some of these questions. Let me go down here. Let's see here. One of the questions I thought was interesting, and I saw several variants of it. What about support? So like, I'm an agent, I'm like brand new to this, and I'm gonna reach out and try to sell B2B merchants. Maybe I'm already with NAB. One agent mentioned that they're already with NAB. What's the process? Do you kind of hold their hand a little bit, and what would they do to work with you? Like, hey, they get a big one on the hook. What do they do?
yeah, great question. We want to be engaged as much as the agent wants us to be, right? So sometimes they want us completely invisible. Sometimes they want us to be the subject matter expert up front. So call my team and let us know what you want. We'll do the demo for you. We'll train you to do the demo, right? We'll help you, send you to someone like James to do the statement analysis, right? We want to get the tools in your hands to be successful. I mean, we believe that rising tide of B2B can raise all ships, and we really want to encourage folks to do it. This is a longer sales cycle because there's oftentimes more stakeholders involved in the decision. So there's a bit more of a commitment on the part of the sales agent, but I'm just here to tell you, it's worth it. I've been doing this for a long time. These are
Yeah.
nice people to work with. They ask intelligent questions. They're not going out of business in 12 months. They're going to be
Yeah.
here and they're going to add another location and then another location, and their business is going to double and your residuals are going to double, and it's worth chasing down. So the answer to your question is really depends. You tell me how much involvement you want.
Right.
We'll call them and set up a demo and talk them through it and set you up as the expert if you want us to.
Love it. Last question for you, Eric, is I want to give you one more chance to clarify because there are several questions here towards the end about, hey, I'm an ISO. Can I still work with Patrice? And I knew there'd be a little confusion in the industry about, the NAB relationship. Can you clarify one more time about kind of these different opportunities with Patrice as far as the NAB deal versus kind of I'm already an ISO?
Yeah, and you know what? I think you mentioned earlier, industry is becoming more complex, and so I
Yes.
apologize, we're adding to the complexity, but the answer is yes. I mean, if you want to use us as a technology solution, please call my team. We offer NAB now as a platform. So if you're using EPX as an option, you can now integrate that in there, just like First Data, just like TSYS. We really don't care. The functionality, the level 3 optimization, it's the same across the board. So qualifying, north of 99% of all transactions in their appropriate, categories. And so the answer is yes, we can definitely help you. If it makes sense to do EPX, we certainly have you can see the email on there. We'll give you a couple reasons why at least you should consider it. Take a look at it, see if it's a good fit for you.
Awesome. Well, there's been a lot of other questions on here. This event is recorded. Several of you asked about that. We're going to put it up on YouTube, hopefully tomorrow or the next day. So if you missed something, jump off, whatever, you could do that. And then, Eric, thank you so much for your time. Always a pleasure to connect with you. And I really appreciate your expertise for our audience today.
Thanks, James. And thank you everyone for your time.